It's time for Operation Freedom with your host, Dr. Dave Janda, on Southeast Michigan's conservative powerhouse, WAAM Talk 1600.
Thanks for tuning in, folks, and welcome back to WAAM Talk 1600's Operating Theater. It's the only OR in all talk radio. I'm Dr. Dave Janda, broadcasting from a safe and secure, undisclosed Level 3 Freedom Bunker, while my wingman, my boss, has, through the wizards of his technological experience and know-how, Derek Stone he's at our Freedom Bunker based at WAAM Talk 1600, and we're able to yet again pull off this freedom-based broadcast, much to the chagrin of the Commandant of Stalag, Michigan, the largest POW camp in all of North America, that being the state of Michigan. Much to the chagrin of our Commandant Klink, if you will, Gretchen Whitmer, we're able to pull this off yet again. You know, folks, we're not just available 2 to 5 every Sunday for your freedom-based platform. We are available 24/7 at the following locations. Our YouTube channel, also named just like the radio show, Operation Freedom. Go to youtube.com, type in Operation Freedom channel, up it'll pop. We have well over 100 videos that are there for you to not only consume, but to network. The more people we have empowered with the facts that the bought-off lamestream fake media will never touch, which we present on this platform, the facts, not propaganda, not misinformation, disinformation, but the facts, so that you can enhance your freedom. We present that information on this show and our YouTube channel and at davejanda.com. We have the public side where we upload information on a regular basis, but where the real meat of the matter is with our extra shows, our WTF political analysis show, where we take the information from my sources, we bring it together in a weekly summary of what's happening behind the curtain, a summary you will get from no other source in the alternative media, let alone the bought-off lamestream fake media. Then we have our Insider Insight show. This past week, we had General Tom McInerney speaking about what's happening behind the curtain. You're hearing about some of these generals coming forward. Well, you need to know why they're coming forward in opposition to President Trump. And it's not pretty. And General McInerney discusses that issue. This coming Thursday, we have Colonel Craig Roberts, who was not only a sniper in the United States military, but when he retired from the military as a Green Beret, he then went to work in the Tulsa Police Department for many years. He ran the SWAT team. He ran many investigations. He actually was the one person from the Oklahoma police force that they actually had brought in after the Oklahoma City bombing. Incredible interview, present for our subscribers at davejanda.com. You get the WTF show, the Insider Insight show. You get the access to all the podcasts for the last 10 years of this radio show, including this podcast today, which will be up for our subscribers by 8 p.m. through to the brilliance of Derek Stone. You have our healthcare policy series, our contributing editor series, again, all for 30 cents a day. I hope you'll become part of our Freedom family. Without our subscribers, this radio show, the YouTube channel, and the website would not exist. What we do, folks, is every week in our operating room, we dissect current events that are impacting you, your family, your business, our community, and our country. And we bring to our operating room information and guests the bought-off lamestream fake media either ignores because it doesn't fit in their preconceived, politically correct, bought-off agenda. Because, folks, they're petrified. They're petrified of what might happen if they actually tell you what you need to know. This show is about your freedom, your political, your economic, your financial, and your health care freedom. A topic that we have focused on over the 10 years since the inception of this radio show is your financial freedom, your financial empowerment, and your financial well-being. The approach we take is drastically different from Bloomberg, Reuters, Fox Business News, or what I call CNBS. I believe all those other entities are tentacles of the deep state, and they're feeding you misinformation that actually will put you in your financial harm's way. I am honored to have back with me someone who is very, very popular with our listening audience, TraderStef. Now, that's a name to plume. And many folks, when they first hear of TraderStef, they go, well, why does Steph go by a name to plume. Oh, here's why. If you look at Stef's background, beginning in 1996, TraderStef initiated a career spanning 14 years within the New York City investment banking industry. She acquired a diverse skill set in human resourcing, technology and communication, training, education and development, business analysis, and global risk. She began investing actually in precious metals as far back as 1999 while following market trends post-dot-com bubble in 9/11. Stef then left the banking industry in 2009 after 5 years in global risk management at Citigroup. Stef has developed and hosted a live Precious Hour webinar specializing in gold, silver, and mining equities, combined with research of industry fundamentals, deep dissections into financial markets, global news events, geopolitics, and monetary policies, otherwise known what she calls as fusion analysis. You can follow her work in a number of different sites, but I suggest traderstef.wordpress.com. Stef, it's an honor to have you back on Operation Freedom.
Dr. Janda, how are you? It's good to be back.
Okay, Stef. So, Stef, when folks heard that you were going to be on the show this week, I started getting emails from our listeners, and they said, we're getting whiplash. One day we're down 1,800 points, then we're up 400 points. Please have Stef give us that great analysis that she does on why this such terrible and huge volatility, what's behind it, and what should we do?
All right, you ready? Here we go.
Hit it.
My domain now has changed. It's been upgraded, by the way. It's TraderStef.com, everybody, so you don't have to do the whole WordPress thing anymore. So listen, back on our March 1st interview, I said, unfortunately, we've all been infected by the virus. Not literally, right? But rather, everything we do on a daily basis is being impacted in some way, and the financial markets have finally caught on to it. The question is it going to force the Fed's hand to act preemptively? And the coronavirus and the Fed could trump the stock market and the gold market, with the Fed being forced to act as the global financial economic systems were grinding to a halt. So everyone knew what was happening. So let me just fast forward to a moment to today, and then I'm going to back up again. I want to jump around a little bit here, but with regards to this pandemic, we're in a Herald wave, and otherwise known as the first wave, as they say. Mm-hmm. And you can see that when you're looking at a historical chart of excessive deaths, that in any given time period where you include all the causes of death, the first wave has massively exceeds the average norm, as well as any minor blips over the mean average that can occur during a bad flu season, for instance. So a second wave has not manifested yet, and nobody in our generation has ever experienced that. I got some history in my family with it, but epidemic hotspots can pop up throughout a Herald wave. Like, hi, I'm here, which is a distinct feature about those first waves when they happen. A novel disease emerges. It's in the process of adapting to its new host. Stay away from me. And the second waves then manifest with a higher virulence everywhere at the same time versus global hotspots in a first wave. So in examples, the 1918 pandemic. So to wrap that up, what you and I are not hearing about in the mainstream press and the majority of alternative media, unfortunately, is the gene sequence history of SARS-CoV-2, as they call it. They finally came up with a name. So, SARS from 2002 and 3 only had 800 deaths worldwide total, and it was squashed because of tracing and isolation, and, that worked. So remember, Italy was the first Western nation that had a comparable healthcare system to us. So we could trust the data coming from the government. Well, it mutated from the Wuhan virus there, which became much more virulent and deadly, which is why Italy got slammed. And it came in the back door of the East Coast of the United States. Well, everyone was focused on the West Coast and travelers from China, but the Italian strain slammed the East Coast, and since then, it mutated into several new sub-lineages. It has effectively seeded the United States and the majority of the rest of the world. It's reestablished, it's seeded. Not sure about Southeast Asia yet, but South America is an example. Brazil's getting slammed. So, look, at this point, it's highly unlikely that the bug is going anywhere. Coronaviruses and their nature, they mutate, they recombine. That's what they do. I ain't going to argue with Mother Nature. And not only that, it survives by faking out antibodies. So the only hint that I've heard of this from actual people is like Governor Cuomo, in his press conferences. But the problem is, what you see, they call it the strain from Europe, the virus from Europe. It's like everyone's so politically correct today, they won't put a country's name in front of a virus. It didn't originate in Italy. It was coming from China because they have a lot of Chinese workers in the sweatshops, for instance, and seasonal workers that pass through Italy. Anyway, so look, the odds have increased dramatically that the world will experience a second wave on some level in the fall. So in my humble opinion, it's what I'm doing. It's what I did back in January and February. I think folks should just prudently prep this summer, stay nice and calm, be ahead of the curve. And, a novel virus doesn't care about your opinions, border science, or politics. So, just be safe and don't go crazy. Don't buy anything that you're not going to use. Just basic stuff. And what's that got to do with the stock market and gold? Great question. In a rare meeting, after our March 1st interview, in a rare meeting, on March 3rd, the Fed announced a 50-point interest rate cut. Then on March 11th, the World Health Organization declared the pandemic. Fed launched an emergency QE, and then on March 15th, Bill de Blasio said, we're going to have to shut down New York City. On March 16th, gold put in a low of $1,451 an ounce. Mm-hmm. On March 20th, I published an article. It's called A Pandemic's First Wave Burns the Fed and Global Economy as Gold Wins. So, look, when I published that, I published it on the day that gold put in a double bottom on March 20th of 1454 after the fall, which then pivoted upwards into a cup and handle pattern while exiting a bear trap that was the result of the financial market plunge that caused major margin calls in equity holdings. And in order to immediately access cash to cover those margin calls, institutions and big pocket investors were forced to sell their paper gold, which is one of the most liquid assets on the planet, as a last resort of insurance, if you will. You should be investing in precious metals for insurance because it retains your capital, which is similar to what occurred back in the great financial crisis from March to October 2008. But this time, the plunge happened in a much quicker, short time frame within 5 weeks. So just recently, May 28th, the New York Fed President Williams said, we're not anywhere near our limit to run up debt. And you ready for this one? Powell, the chairman, he came out, I kid you not, he says, we're not even thinking about raising rates until sometime in 2023. So what does that tell you?
It tells us they will print to oblivion, and they will do everything to create an inflationary environment, which is why, as you state, precious metals such as gold and silver are such great insurance policies.
Right. And then there's the two sides of that coin. There's buy the rumor, sell the news. Mm-hmm. So one way you can interpret that, hey, the Fed's got her back. Risk off. Right. Buy anything you want. The Fed's going to fix it. But then on the other hand, you're thinking, oh, my God, it must be really bad. Mm-hmm. They're going beyond the limits. So let's get to the gold analysis. I don't think we have much time left. So on March 1st, I said I'd jump around a little bit. I mentioned that there was an air gap between 1620 and 1697. Right. And those were I mentioned those targets back in our December 2019 show.
You did.
By March 1st, that was water under the bridge. We had been there. We met those targets, and it was time to take a breather. And that the stock market music stopped playing like around February 13th, actually. That's when it began to correct. So I had said then that the pullback in the markets were reminiscent of the great financial crisis, like when gold pulled back for a bit and then the margin calls and that whole thing I just talked about. But, it's all about automated trading platforms. So the market's kind of psycho, and it's very efficient at moving very fast. So look, from November 2019, gold was $1,445 an ounce. It ran to $1,689 by February 24th, 2020. And I said on March 1st that gold had gotten way ahead of itself with a $145 move, and it needed a breather there. Something was going to trigger another pullback in the markets overall. And I suggested maybe taking some profits off the table in the stock market just to be prudent. So gold was in one of the typical seasonality patterns. Every year, somewhere around March, April, the price tends to chop and correct until like early spring or summer. That's exactly what's happening. So, I couldn't make a definitive market call in our last interview. I was specific about that because March hadn't happened yet, but I did expect continued consolidation and chop, and that everyone, I'll quote this, everyone needs to have some patience here, unquote. So since that 1454 low on March 20th, gold tapped 1747 on April 15th, chopped through a pennant. It broke out to 1765 on May 18th. Mm-hmm. And I noted on my Twitter feed in subsequent analysis that we're approaching the end of the seasonality doldrums. Stay on your toes for a run to 1800, but expect resistance now at 1750, 1765 before 1800, and then to the all-time high of 1920. So on Friday, gold closed at 1733 Fibonacci, and it has tapped 1750 7 times since it broke out of the pennant on May 14th. So, look, the big picture with gold, and I'll mention something real quick about silver. Since the low of 1160 in 2018, gold has continued to put in higher highs and higher lows with a distinct up channel on the chart that confirmed in May and June of 2019 when we left that seasonality spring doldrum pattern. So when gold finally took out that 1380, which goes back to 2013 as a resistance level, there's been a $605 gain since August 2018. That's roughly a 50% gain in 22 months. So that's 25% a year thus far, short of 2 months. That's not too bad, is it?
No, it's great.
Yeah, I'm not complaining. And silver also experienced that quote-unquote bear trap, which was the swoon in the market. It was pretty rough. Cash needed to become available. But I mentioned in our last interview that silver has a huge industrial use, like over 50%. And the global markets were already rolling over. The global economy was already taking a hit, and base metals were not performing well, and they were taking a hit. So silver was, subject to that other factor versus just its monetary value and being the little brother to gold. So it fell to $11, but it has quickly retraced all the way up to 1834, and it closed on Friday at 1747. But, I'm beating a dead horse here, and I've been saying it since 2015, 2016. Any point after 2015 low, it was a good time to be a stacker. You really can't go wrong. The price was just ridiculous. But 2149 is the big kahuna. And the reason it is, when you look at a monthly chart, there's been 5 times, I don't have the chart up in front of me right now, that it's hit that number since it made its initial run in 2010. And we haven't broken through that since 2013 again. And once it gets there and it takes out that 2149, 2150, I think we're going to have a pretty good run. So I can't give you a time frame on it, but depending on what gold does and what the characteristics are of the economy going forward and how this virus plays out, because, look, Powell made it very clear a month ago that what is guiding monetary policy right now is overwhelmingly what the virus does in relation to the global economy.
Folks, we're speaking with TraderStef, TraderStef, STEF.com. Steph, a couple folks contacted me this week and said, whenever gold or silver has a big up day, we never hear about it in Fox Business News with Stuart Varney or any of these folks. But when it has a down day, it's almost every 15 minutes they're showing you the price of gold and silver and the fact that on that particular day, at that particular moment, it's down. And folks want to know why is that the case?
It's the basic psychology of the retail investor. And, the moves happen so fast, both to the upside and the downside. As I noted in the previous interview, it's automated trading platforms with their high-frequency trading algorithms. They accelerate and they exaggerate moves, and they're very efficient at selling equities and other asset classes. It doesn't discriminate. And then you got the artificial intelligence factor involved with machine learning robots, and they finally established a new vocabulary. For instance, now it knows what the word pandemic means. Welcome to the machine. 95% of trades are executed autonomously in the markets. And AI, it's like it trends to psychopathy when it's optimized, and now it's optimized. So the markets are kind of psycho, and the virus is out of control, and the markets are very fast and efficient. But when you look, at the big picture here, don't get caught up in the intraday moves. That's for the professionals. But take advantage of the dips.
Steph, many folks wonder if these automated platforms that cause havoc in markets, which you were one of the first people to speak about this years ago. Many people wonder if these automated platforms can be reined in at this point, or if this is just something that everyone that invests in any type of financial market is going to have to deal with for not only the foreseeable future, but forever.
Welcome to the machine. Yeah. The only option you have is the IEX exchange, which there's a long story here with regard to high-frequency trading algorithms and that whole mess and how that works. There's only one exchange out there that's kind of pulling the plug on the damage that it can do with your own personal account. Because, imagine you're standing at line and at Costco during the pandemic, and it's a long line, and someone jumps the line. That'll piss you off, right?
Oh, it would me, yeah, right.
Yeah, it's kind of like what happens with high-frequency trading and algorithms, where they're jumping the line and they're scalping fractions of a penny and fractions of a second at very high volumes. And then you start adding up those pennies, and then over, a year. Remember all those years the banks never showed a loss in their trading bottom line? Right. That's why. So there really isn't a solution to this, but be aware of it. And it's not your grandfather's market. It's not your father's market. It's a good idea to understand the basics.
Steph, I'd like to thank you and the knowledge you impact everyone with your work. TraderStef.com, TraderStef.com, folks. I encourage you to follow Steph on a daily basis. Folks, you're listening to Operation Freedom. I'm Dr. Dave Janda, broadcasting from our secure bunker elsewhere from WAAM Talk 1600's Freedom Bunker.